Hello, I'm Demetris Theophanides, Director of XSpot Partners Ltd. In this video, we will look at the latest developments regarding the US presidential elections, which will be held on Tuesday, November 5th, 2024. Voters will be electing not just the president, but also congressional candidates for seats in the House of Representatives and the US Senate. The outcome of the US elections will have consequences. But how will those results affect the financial markets? What do the latest polls show, and what do we expect after the election of the next president of the United States? Please stay tuned as we will try to answer those and other related questions. According to the latest polls, Vice President Kamala Harris and former President Donald Trump are in a tight race for the White House. Although it is expected a neck-and-neck battle between Donald Trump and Kamala Harris, there is a wide range of fluctuations regarding what analysts and polls predict about the election's outcome. Some polls show Donald Trump leading by a few points over Kamala Harris, while others show this difference to be even greater. Additionally, some betting companies give higher odds for Donald Trump's elections compared to the first time he ran for the US presidency. In any case, we have a wide range of estimates concerning the election outcome, so we must say that all of this is fluid and changes from day to day as the electoral process progresses. Thus, after the end of the elections, there will be a clearer picture of what is expected to follow in the US markets. We believe that the markets have nothing to fear regardless of the outcome of the US presidential elections. Based on past historical statistics and various studies conducted, it is proven that the financial markets perform very well regardless of which political party or president is in power. The presidential candidates in the USA have already announced their positions and policies which they will implement and follow, which do not differ significantly from already implemented policies of the past 4 years. It is worth mentioning that based on the pre-election announcements made by both presidential candidates, they will both focus on the issue of taxation, which will have an impact on the earnings per share of the companies in the S&P 500. Though, based on the announcements, if Kamala Harris is elected president and implements the economic plan which she has designed with her team, this is expected, according to some studies, to have a negative impact of 4.7% on earnings per share for the S&P 500. As an example, among Kamala Harris' proposals is the taxation of the stock buyback program of US companies. This taxation, if implemented, may have a negative impact, as in recent years we have seen that one of the main drivers for rising stocks is the stock buyback program of many US companies. According to the plan drafted by Donald Trump's team and based on studies, the S&P 500 is expected to receive a 4% boost in earnings per share if Donald Trump is elected. Now, this number is significant since earnings per share for the S&P 500 in both 2024 and 2025 are running at almost double digits. So if we add the 4% boost to this rate of growth in earnings per share, there will be an even more positive target for the S&P 500. At the same time, investor sentiment is expected to improve even more, and this will support even higher market levels. So we believe that a victory for Donald Trump could bring an even stronger year-end rally for an already successful year. Regardless of the outcome of the elections, we believe that portfolio positioning and investors' decisions should generally be dictated by a long-term plan rather than by current political events. After all, market moves are more likely to be driven by economic fundamentals such as inflation, interest rates, and corporate earnings.
Hello everyone. The focus remains on the tariffs, particularly in the high-tech sector and the microchip industry, which has been a key driver of stock returns. While trade restrictions, especially those impacting US companies supplying equipment to China, are already significant, it's unlikely they will ease anytime soon. However, markets, companies, and nations have found alternative solutions to address their microchip needs, potentially accelerating investments outside the US to meet the demand. Despite short-term uncertainty and volatility in the semiconductor sector, the industry is vital to national security, and the nations will continue to protect their production and innovation capabilities. Now, if Donald Trump is re-elected, sectors such as energy, banks, and technology, which benefited from his previous term, could strengthen further. Regardless of the election outcome, no major surprises are expected in the markets. While there is concern that rising bond yields may be tied to pre-election announcements from both presidential candidates, the more likely reason for that increase is the strong performance of the American economy. Recent 10-year bond yields have reached unexpected levels, but this is less about the election fears and more about the economic strength driving the expectations that the Federal Reserve may implement smaller interest rate cuts than anticipated. The rising bond yields seem more related to the economic performance rather than election uncertainty. Thank you for watching.